Hello, this is Doug Gerlach from myICLUB and iClub Central. Welcome to our Investment Club webinar. Today is Tuesday, July 15th, 2025. Tonight, our topic is custodial accounts in myICLUB and in investment clubs. We have recently launched a new feature to support custodial accounts, and that impacts the club reporting and the tax generation to prepare the appropriate schedule K1 and K3 for your minors that might be in an investment club. So this is a great feature for any sort of student investment club or family club, or if you're thinking about launching a club and including minors in it, this is going to give you a little bit of insight into what you need to do in myICLUB to support those. So tonight, Russell Malley will be leading our presentation. Sean Pulrang is also in the back office, and he will be available to answer questions. So we'll be turning it over to Russell in just a minute. I wanted to remind you that the handout is available in the GoToWebinar application, so you can click that and save it for future reference or quickly print it to take notes during the webinar. It'll also be available when we archive the replay of the webinar on our YouTube channel at iClub Central, so you can also find it there. If you have questions, please type them in at any time, and we'll be able to take them during a couple of breaks during the presentation, as well as at the end. As I mentioned, Sean is ready in the back office to help out with any additional questions that might come through. I do want to remind you that we do not provide personalized investment or legal advice to individuals or investment clubs, and clubs are responsible for following federal, state, and local regulations regarding all operations and tax reporting of your investment clubs. This is relevant to custodial accounts because there are some differences from state to state, so you may need to do a little further research into the state in which your club resides to make sure that you're following all appropriate regulations, and so that you don't run afoul of any laws that might impact your custodial accounts, either the custodians or the minors that might be in your investment club. And so with that, I'm going to turn it over to Russell. Thank you, Russell, and please share what you've learned about custodial accounts and how they're implemented in myICLUB.
Okay, thank you, Doug. So tonight we're doing support for custodial accounts in myICLUB. So first question people might ask, can minors invest in securities? Well, if you go to a financial institution, they won't allow minors to directly open accounts. They can't sign contracts, and you have to sign kind of a contract. There might be one exception. I think Fidelity has a special type of account. However, you can introduce using what are called uniform or custodial accounts, and we'll get to the type in a minute. So by using these custodial accounts, you can introduce your children or grandchildren or aunts or nieces, nephews, or to savings and investings, which, you know, here at iClub Central and Better Investing, we know they can have lifelong benefits. And those accounts where you can get them this experience are custodial accounts. So they allow investments for the benefit of a minor, but they have to have a guardian that is an adult. So what are the custodial accounts? Well, there's some sort of financial account established by a donor for the benefit of some beneficiary, and typically the beneficiary is a minor. It's administered by a custodian or guardian, depending on what type of custodial account it is. And that custodian or guardian has a fiduciary duty to the beneficiary, which means they have to act in the best interest of the beneficiary. Okay, and there are multiple types available, and it depends on the state and the purpose you really want. So for who can be a custodian? Well, the custodian does not have to be the parent, though those are probably the most common. It could be a grandparent, other relative, or in most states, it can be any other adult individual. And usually the donor who sets up the account has the ability to determine who is the custodian. and who can contribute to an existing custodial account. Okay. So what types of custodial accounts would allow to be a partnership interest or possibly trade in securities? Well, it will depend on what state you're in. So, or what state the donor is in, because it doesn't have to be the state where the minor lives. So the first laws passed that allowed this were the Uniform Gift to Minors Act. And these are available in all 50 states. Right? And the second is the Uniform Transfer to Minors Act, or UTMA. And all states have UTMA laws except South Carolina and Vermont. So here are some basics of these two kinds of accounts. So in both, the minor is the legal owner of the account, but they do not have control, right? They do not have control until they reach the age of majority. For most states, the default is age 18. The assets in the account are contributed by others and are considered irrevocable gifts to the minor. So a donor needs to know that they can't get the money back. It becomes the minor's property. So while the beneficiary is a minor, those assets are managed, controlled by the custodian, but the uses are restricted by law and they have to be used for the child's benefit. Okay. If they're investing in an investment club, I guess investment education could be a benefit. So taxes are paid typically at the minor's rate. There are some limitations, and the specifics vary by state law. So we'll go federal law in a few minutes. So let's do a little comparison between the two. So the UGMA is the older of the two types of accounts, but it restricts investments much more. Usually it's just restricted to bank accounts, life insurance, CDs, very limited. Definitely control reverts to the minor at age 18. If the minor is applying to college, these assets are considered the minor's assets when a college determines their financial needs. These are all available. All 50 states have UGMA laws. And again, they're uniform laws, and they're very similar. They're not quite the same in all states, so there will be slight variances. For the Uniform Transfer to Minors Act, they're passed later, and they expand on the UGMA. There are a wider set of assets that are available, including mutual funds, stocks, bonds, even real estate and art, and businesses like a partnership interest. And depending on the state and how the account is set up, control may be delayed to 21, and in some states even longer to 25. So you'll have to check with your state and how you would do that. Again, these are also considered the minor's assets for determining college financial aid needs. And UTMA accounts are available in all states except for two, and that's South Carolina and Vermont. And again, there are slight differences between states, so you'll have to check with the state and see exactly what's true in your state. Now, these are considered irrevocable gifts, and the amount you can give is unlimited, but there are some things that come into play. There may be gift taxes. So if an individual gives more than the gift tax maximum, the donor may be paying a gift tax. And as of last year, that was $19,000 per individual. So a couple could give, they could gift split and give up to $38,000. And that would not be making a taxable gift. Okay, so how do you go about creating a custodial account? So it varies slightly by state because this is a uniform law, and these are usually set up by groups to try and get the laws very similar among the states. They're going to be quite similar. And it was a little surprising to me, but you do not need to be, the account does not need to be created in the state where the minor resides. So For instance, I have a daughter in Massachusetts. She's not a minor anymore, but if she had children, I could set up a California UTMA for a grandchild, even though they don't live in California. So you could consider that. That could be a way to get around it, UTMAs for those in South Carolina. Okay, so each state has a particular form that the gift takes. This is a sample document from California. So transfer, you can see it says it's a transfer under the California's Transfer to Minors Act. It gives the name who's transferring, it gives who's the custodian, and it's dated, and it also says that the custodian acknowledges receipt of the property and they will act as custodian. Here's one from Massachusetts. You can see it's pretty much the same, except Massachusetts is substituted instead of California. If you want to see the form for your state, I found these pretty easily just by doing an internet search with the state name and UTMA account. So you will find that these accounts are often in the law of the estate law or probate law of the state. So that was a little surprising to me, but that's where they are very commonly. Okay, so we can go to investment clubs, these accounts in the club. I think we'll take a little, are there any questions out there so far, Sean?
No, we have a wrapped audience.
Okay, so probably these best fit where there are family or student investment clubs. My club, for example, I'm related to like 90% of the members of my club. Even for student clubs, it gives hands-on investment education. But again, any minors in these should be set up as a custodial account because a partnership agreement is a contract and minors are not allowed to sign contracts. So they need someone to sign for them. And that's where this custodial account comes into play. So how do you enable it? So if you wish to have a custodial account, it should be allowed in your partnership agreement. So if you haven't put that into your partnership agreement, you may need to amend your partnership agreement to say that you will allow custodial accounts. That's pretty much any regulatory filings that's done beyond, the person has to apply and meet the requirements of your investment club. Now, what are possible legal risks? Are mainly that the custodian is misusing the funds, or the club does not allow transfer to the minor when they reach the age, either the default age of majority for the state, or for those states that allow it to go to later ages, the age stated in the document that created the account. So, if you're following the laws of your state, you should be fine, and they're not really onerous, they're pretty simple. So what about how does it affect the operations of the club? So set guidelines for participation of the minor. If the custodian says, oh, we're going to let the minor make most of the decisions and I'll listen to them, that should be spelled out. How they participate, make sure they don't become an inactive member, because you could get afoul of SEC regulations about you'd be considered a limited partnership, which are regulated by the SEC. And technically, the custodian votes on behalf of the minor or has control or oversees what the minor is voting. So the club should respect those responsibilities of the custodian. Remember, the custodian does have a legal obligation to manage these assets in the best interest of the minor. Okay, so once you have an account set up, you want to do that, your partnership is set up to allow them, and you have someone who wants to do that. So first you have to get them, added as a member. So go in and add them as a member. And then in the people tab, you just go to the set to the accounts to custodial, make it set once. Their name will appear, not just their name, but it will show that it's a custodial account, either UTMA or UGMA on all the reports. Right? And then follow the partnership agreement for adding a new member. Right? You just go to the people tab, click on add member, follow the directions in that part. And then after the member is added, you go to the club roster, go to the people tab and click on their name, and you will get their profile, and you click on the edit profile button. It's not shown here, and scroll down to the personal information, and you see there's a thing that says custodial account, and the default is not applicable. You just click on that and it'll get a drop-down menu, and you choose either UGMA or UTMA. Most state laws probably will not allow a UGMA for have a partnership interest, so probably you're going to be checking UTMA. And then once you have that, you have to pick the custodian, and you see it should be, you'll get a drop-down menu with a list of all the members, or if you can do a visitor. You have to pick out a visitor or member of the club to be its custodian. And then you'll see on their member status report and any other report where a member's name appears, you'll see that the UGMA or UTMA will appear next to their names. Okay, any questions on this? Move on. Sean, do you have questions?
Oh, I'm sorry. No, I'm sorry. I'm so used to you being able to see the questions. Nope, we are all set. Carry on.
Okay. So tax matters. All right. Since they are a member of the club, the myICLUB club tax will generate a Schedule K1 for the for the 1065 for the minor as a taxpayer. The account belongs to the minor. They report the K1 is in the minor's name. Okay, it will do that. It will also do that if you have to report for state. You're doing a state partnership return also. Now, partnership income is considered unearned income, and unearned income in a custodial account, the first $1,350 so for this tax year is tax-free, so the minor would pay no tax on that. The next $1,350 is taxed at the minor's rate, so they would file an income tax return and figure out what their rate is from their income and declare that, and whatever that rate shows, that's what they would pay. Now, any income over $2,700 is taxed at the parent's marginal rate. Okay, and there are also provisions so that the parents can also claim it on, as long as it's under a certain amount, the parents can claim that amount on their personal tax returns. Now, a big thing we like to go about is the centralized partnership audit regime. This is how the rules for how partnerships are audited by the IRS, which changed, became effective in 2018, 2000, around that time. And if you can opt out of the centralized partnership audit regime, we recommend that clubs do. However, the IRS is taking a very strict reading of the law and says you must be one of the listed eligible partners in the law to be able to opt out, and custodial accounts are not listed as eligible partners in the law. So under the current interpretation, clubs with custodial accounts will not be eligible to opt out of the CPAR. So that's sort of a disadvantage. I may be a little optimistic, but if you're keeping your books good, I don't know of many clubs. Matter of fact, in 25, 30 years, I've never heard of a club being audited by the IRS. It's always late filing issues that we see. That doesn't mean investment clubs haven't been audited. I just haven't heard about them and things. So weigh the pros and cons of opting out and educating the next generation before you consider custodial accounts. So what happens when the child reaches the age of majority? So myICLUB will not automatically switch that. We don't carry their birth date, so we don't know when they reach that age, and the dates when they reach to have control can be different from state to state, so we're not going to be able to do that. So you're going to have to be aware of when the child reaches the date, whether it's the default age of 18, or if it was set up to be at 21 or 25 in some states, you can stretch it out that long. Technically, the custodian is supposed to inform the holder of the assets and say they have reached the age of majority and they should have complete control over the account. So if you don't get that and you're thinking the minor's close to the age when they should have control of the account, you might want to contact the custodian. And changing it over is really easy. You just go back into the people profile, the member profile, go down to that custodial account and the personal information, and just change that from a UTMA or UGMA account to not applicable. Now it's a regular individual account. Okay, and here's our question section. So do we have any questions, Sean?
Well, there was one, and you then proceeded as though you could read the questions and went ahead and answered it. It was a question about changing the account type in the myICLUB. So I think we're all set.
And oops, someone hasn't realized that that's not my address. My email address is actually rmalley@iclub.com.
So, but yeah, I think otherwise thorough.
I do have something that
set.
updated that came to me after this was done. We set this up, finished it up this afternoon, and that's what happens if a custodian dies. And there are procedures to, or resigns, there are procedures to just appoint a new custodian. So that's that, in case of such a tragedy, or someone wants to resign, it is possible to change the custodian. So, and again, there may be set forms that each state has to tell the asset holder, in this case your club, that the custodian is changing. Okay,
all right.
No other questions?
I think we're all set. Thank you.
Okay, well, thank you for joining us tonight. I hope this was informative. If you have any other questions, remember that email address is really rmalley@iclub.com.
All right. Thanks everybody who came, and we hope to see you all next month. Until then, take care.